In this video, we will show you the #1 moving average convergence divergence trading strategy that will allow you to trade like a pro. Besides, we will take a look at the breakdown of the recent Solana long trade we took using this exact strategy. This will be the most valuable and reliable MACD indicator video you will ever watch online. You can use this insanely effective strategy for crypto, forex, stocks, and options trading. During this video, we also will show you how you can get access to our top-notch private indicator, known as QuantAlgo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we move on, if you want to show us your support and speed up the release of a lot of new content, make sure to hit the subscribe button and hit the notifications bell. It's only 2 clicks, but it means a lot to us. So, the video will be structured as follows. And let's start with the first topic. So, what is the moving average convergence divergence? MACD is a trend-following momentum indicator that shows the relationship between two moving averages of a security's price and calculates by subtracting the 26-period exponential moving average from the 12-period EMA. As a result, traders can understand whether the bullish or bearish movement in the price is strengthening or weakening. MACD is one of the most commonly used trading indicators among traders. However, most of them are often used this indicator wrongfully. For example, some traders open long and short trades based on the MACD crossover, which may be okay when we have a trending market, but this approach will lead to huge losses when the market is consolidating. Other traders open the trades based on the MACD histogram, opening the long trade when the histogram is green and rising, and short trades when the histogram is red and increasing. However, the price is not always followed by the histogram, especially when we have a consolidation, leading to a loss as a result. Finally, some traders trade MACD divergence using a single time frame approach and not combining this indicator with price action, which is wrong. With that, in today's video, you will learn how to use it properly, thus taking your trading to the next level. So, let's move to the next topic. The bearish MACD divergence occurs when the price action forms a higher high, while the MACD histogram forms a lower high. This shows us early signs of trend exhaustion and gives a bias to the trade long. Some traders identify MACD divergence through the swings that form MACD line and the signal line. You can apply concepts covered in the video to this type of divergence as well. But, in this video, we will use the first approach, focusing on histogram divergence. With that, bullish MACD divergence arises when the price forms a lower low, but the indicator histogram shows us a higher low. This allows us to look for the long trades. But how to trade this setup like a pro with insanely high accuracy? First of all, we should bear in mind that the price may form another swing even after divergence is formed. Also, we don't know when the second leg will be completed, so that we cannot jump into the trade immediately. So, the best and easiest way to confirm divergence is through the trend line break. With that being said, let's move to the next topic, and discuss the exact step-by-step process. So, here's Euro-Yen. As of now, let's add the exponential moving average with the length of 50 to the chart. As you can see, the price has made a lower low, while the indicator's histogram has made a higher low. So, we caught a bullish MACD divergence. Now is a very important point. We should draw a trend line along the top and wait for a breakout of it to confirm that our divergence is true. Moreover, the price should also be above the 50 EMA to confirm bullish conditions. So, we initially can draw a trend line this way, catching the breakout right here. But, at this point, the price is still below the 50 EMA. As a result, we should extend our trend line, considering this new swing. Finally, we got a picture-perfect breakout right here, so that the price is above the trend line and 50 EMA. We enter the trade on this breakout candle, with a stop loss below the second leg and 2-for-1 risk to reward target. And boom, our take profit was hit. However, as you can see, we have obvious disadvantages of this approach. First, we should place a very wide stop loss, which decreases the risk-to-reward ratio. Secondly, we have a very long and huge drawdown right here, caused by the post-breakout price choppiness. Before we solve these concerns, let's see the classic short example as well. We also want to note that you can backtest all strategies from this video using software from TraderEdge, since it is one of the most efficient backtesting tools available on the market at the moment. Thousands of traders are using TraderEdge to get an edge on their competition. This intuitive and easy-to-use backtester gets up to 3 times faster results than using classic spreadsheets. Also, P&L Calendar and Trade Journal enables you to track your trades and identify what's working and what's not. Finally, the Indicators and Strats tab shows you the most profitable indicators and strategies that can be implemented in your trading. In addition, you will receive a full step-by-step backtesting guide, a full course on how to build a profitable mechanical trading strategy, and 4 pre-made high-quality strategies, worthing over $470 for free. TraderEdge has a 7-day free trial, so there's absolutely no risk. Click the link in the description below. Here's Cardano. As you can see, the price has made a higher high, while the indicator's histogram has made a lower high, telling us about a bullish momentum loss. At this point, we should draw a trend line along the bottom and wait for a breakout. And here it is. So, we enter the trade on this candle, placing the stop loss above the second leg and targeting 2-for-1 risk to reward. And the price easily hit our target. But, as in the previous case, we have a post-breakout sideways movement, and our stop loss is relatively big. With that being said, let's move on to the next strategy and solve these concerns. So, in our second strategy, we will utilize a more advanced approach to get a sniper entry and avoid price choppiness. Let's see the Euro-Yen example from the previous topic. So, our first steps remain unchanged. But now, after spotting a trend line break, we should go to the lower time frame to get an extra confirmation. In this video, we will utilize a 5-minute time frame as a lower time frame component. So, as you can see on the chart, here's the area where a higher time frame breakout occurred. At this point, we should wait for a pullback with 2 or more wide swings to draw a trend line. So, we have 2 clear swings right here, and let's connect them by the trend line. Next, we should wait for a breakout of this lower time frame trend line. And here it is. We enter the trade on this candle with a stop loss below the previous swing low and a 3-for-1 profit target. As you can see, our take profit was easily hit. As a result, we significantly decreased our initial stop loss and caught no drawdown fresh upside move. Let's see the short example as well. Here's Shiba, and we have a clear bearish divergence right here. Now, we should wait for the higher time frame trend line break, and here it is. Now, let's move on to the 5-minute time frame, and let's wait for the pullback. As you can see, we can draw a perfect trend line right here by connecting these 2 swings. Then, we can see a perfect breakout of this trend line, so that let's enter the trade with a stop loss above the previous swing high and 3-for-1 profit target. And boom, our take profit easily smashed. Again, we got a superb trade with the tightest possible stop loss and minimal drawdown. Now, let's move to the most advanced and profitable strategy. Before we continue, we want to share with you our top private indicator, Quant Algo, which can be used in combination with concepts covered in the video or on its own. This high-quality algorithm, which combines complex trading processes to tell you when to buy and when to sell, was developed to enhance your trading experience. You can use it on any time frame for different asset classes. So, if you want to access Quant Algo to get results fast, all links will be in the description and the comment section below. Without this algo will put you at a disadvantage. So, here's NVDA stock, and our first step is to establish key support or resistance level on the daily, or weekly, or monthly time frame. We have already set a key daily resistance right here. Next, we should wait for the price action to form 3 consecutive higher highs right at key effective resistance, while MACD should form 3 consecutive lower highs. Triple divergence is a significantly stronger setup that allows us to catch substantial moves. So, all other steps remain unchanged. We draw a trend line and wait for a breakout of it, which occurs right here. Now, let's move to the 5-minute time frame. We can draw a perfect correctional trend line right here by connecting these swings. Also, another great entry point presented itself right here. But, let's use our first pullback. We enter the trade on this candle with a stop loss above the recent swing high and take profit, which equals 5 for 1 risk to reward. And, as you can see, our take profit was hit. Now, let's see a bullish example as well. Here's Solana, and we can see a clear bullish triple divergence right here. The first trend line breakout happens here, but, at this point, the price is below the 50 EMA, so that we should extend our trend line considering this new swings. Finally, we have a great breakout right here. Here's the 5-minute time frame, and we can draw a perfect correctional trend line right here. So, we enter the trade on this breakout candle, with a stop loss below the recent swing low, and a 5 for 1 profit target. And, our take profit was easily hit. So if you are enjoying the video, leave a like on it and subscribe to our channel as it always motivates us to release more new content more often. Thanks for your time and I'll see you in the next video.